Hey YouTube family, it's Stinko, the realtor, your Utah realtor, and I'm going to show you what's going on with new construction. This might literally blow your socks off. You know I got you with the data information analysis that nobody else is giving you so you can make that decision when the right time it is for you to buy a home. Now I'm going to give you the short-term and the long-term analysis. That way you have everything that you need to make that decision. Let's get into this right here, and let me actually just remove myself. Let's take a look at here. New privately owned housing units under construction. That means somebody's going to be living in these in the near future. Units in buildings with 5 units or more. So this is your multi-family. Majority of these, or pretty much all of them, are going to be rentals. Look how much we have under construction. We actually hit 1 million under construction at one point. Look how much higher that is than 08, 09, and it's even higher than the boom of the 1970s if you take a look here to the left. So you'd have to go back all the way to the 1970s to have the same amount of, actually it would be still lower, of new construction, multifamily, 5 units or more under construction. And they say, that they're not overbuilding, that this isn't like 08, 09. Well, if we take a look, there's way more multifamily than there was in 08, 09. And look at this, everything has slowed. Utah builders get aggressive to attract buyers. Now I want to show y'all what's going on with single family. Take a look here. Correct, we do not have the amount that we had prior to 08, 09. We had almost 1 million, so we had 990,000 units under construction. That was the peak, whereas the peak now was 830,000 units. So we do see that that is correct. Single family homes are slightly lower, and we have to also keep in mind that the population has grown since 08, 09. In these 15 years, the population has definitely gone up. So we have to know that yes, there is a bigger demand for the single family homes because of population, and yes, we do see here that there is a lower amount being constructed. However, if we take a look at what's going on with multifamily, I mean, look at that. It's no reason why builders are getting aggressive. Now, the question comes here. Are these builders, or not builders, is the US government going to be able to continuously print this much money? I mean, look at the national debt, right? After World War II, we needed to stimulate the economy, but then we were flat for decades. And then after we went away from the gold standard, I mean, they found a money printer that just never stops printing, right? So are they going to be able to keep printing this amount of money? That's the question number one. So this is why I'm going to give you short-term and long-term analysis of the housing market, of the economy. That way you have all that information to make that decision for yourself. And I always want you to have all the information that you can possibly have so you can make the decision you feel comfortable with. So if we take a look at this, if we have this much more multifamily, and we have multifamily that's going to be hitting the market at record numbers, what does that mean for the housing market? Well, wouldn't that mean that rents would continue dropping? And if rents continue dropping, well, wouldn't that mean less people would want to pay the outrageous prices? So unless they're able to keep printing this money, drop interest rates down to a favorable reason, they're not going to be able to sustain and say that, hey, everything has completely settled. Remember, the National Association of Realtors, the Mortgage Bankers Association, and the Builders Association wrote letters to the Fed urging them to cut rates, not sell mortgage-backed securities, because the housing market could actually cause a recession that they're trying to avoid, right? So they're kind of trying to spin the game on the Fed. And there's all those other bubbles, right? There's a car bubble, there's a tech bubble, there's all this stuff that's brewing in the economy. So none of that has settled. And then we take a look here and we see record amount of new construction on multifamily. Well, if rents go down, then it's probably going to take prices down, right? Unless the economy gets stimulated and they're able to continuously print an enormous amount of money, which seems nothing is really slowing them down yet. So that's really the biggest caveat. That's why I can't come out and say, hey, we are 100% going to have a housing crash, because this is not a free market. A free market does not get manipulated, and a free market does not get bailouts. Well, they're manipulating the market by throwing in fake money after fake money, stimulus after stimulus, bailouts after bailouts. So this market is manipulated. People want to get reelected. People want to keep their jobs. People want to keep their money, and they really don't care about inflation. They don't care about the average American. And when they're talking about bringing in, inflation to a 2 to 3%, growth, they don't mean 2019. They don't care the prices have gone up 15, 20, 25%. They just don't want the growth going forward to surpass 2%. So they really don't care that you can't afford things like it's 2019. They really don't care about that. And again, are they going to be able to print this kind of money? Now, I want to analyze here again. Look at what's going on with multifamily. An enormous amount of new construction that is under construction with multifamily. And if we take a look here, this is privately owned housing unit starts with 5 units or more. So now we see that the starts have dropped and now they're in line with 08, 09 numbers. However, let me actually remove myself and go back to that. I was blocking that there. So if we take a look at what's under construction, we see that we drop down here to pretty much levels that we had in 08, 09. However, we see that we're much higher and we are lower in single family new construction. And of course, they keep printing the money. So what does that all mean with builders, of course, being a little desperate? And don't let anybody tell you that we're not building. Utah has the most new construction per capita per 1,000 residents in the nation, right? And this was outdated. I can't find anything newer. So this is 1 year ago statistics that I'm quoting here. But we see that, and we see the the growth here happening and all that. However, the economy hasn't stabilized. The housing market hasn't stabilized. So we have to analyze what's going to happen. And I'm going to show y'all here real quick. If we take a look at the 10-year, so if we take a look at the 10-year, we actually see that it is lower than it was same time a year ago. When the 10-year treasury goes down, so do interest rates. And we were, in the 8th percentile with interest rates. Now we're in the low 7s. And the Fed signaled that they're going to do rate cuts. So interest rates are most likely going to keep dropping. And there is a chance we end up somewhere in the upper 5s or lower 6s. So that's the correlation between the 10-year and interest rates. Well, if it's lower than it was same time a year ago, then that means, like I've been saying in some previous videos, we probably, unless we see a recession, unless we see something break in the economy where unemployment rate goes up, right? Because we need unemployment to go up. They have to keep this unemployment rate historically low in order for the housing market to not crash, in order for the economy not to crash. Because if we see unemployment going up to 5, 6%, 7%, right, it could just spiral out of control, and we could see the tech bubbles, the car bubbles, the housing bubble, all of these bubbles, just, the commercial real estate bubble, the corporate debt bubble, all of these bubbles just bursting at once. And of course, they want to avoid that, right? But if we analyze this, we see that right now is going to be your best time to buy if you're looking to buy in the short run, because builders are desperate. They know that they have a whole lot of new construction that's, coming to the market. And the sales, like I've been showing, they're way down from 2021 and way down from 2019, right? Sales are down. We have inventory that's even higher than it was in 2019, the last pre-pandemic year. And right here is where you can still get those deals. Now, once, the buyers come out, and let's say we don't have a recession, unemployment rate doesn't go out, March comes around, we could potentially start seeing some of those bidding wars on that entry level homes, right? And I showed this in previous videos where the entry-level homes are not hitting the market at the same rate that they were a year ago. That's why the median price has fallen just slightly above where it was last year, right? We're not at the $600,000. Preliminary data here is showing $530,000. So we're not at the $600,000 of May of 2022. And remember, we dropped all the way down to $510,000 in January of 2023. And right now we're about $525,000, $530,000. So yes, we could probably come back down to that median price. And if something doesn't break in the economy, if unemployment doesn't go up, then we're probably going to see prices start ticking back up in the spring, especially on those entry-level homes. So if you're looking for those entry-level homes, or you're in an area where there's not a whole lot of new construction, you're probably going to want to take advantage of that right now. If you are in an area with new construction, you're also probably going to want to take advantage of that right now, unless, again, you're in a long-term wait. Unless you want to see how the recession is going to play out, how all of this inventory hitting the market is going to play out. So you have to make that decision. Hey, do I want to wait, in another 6, 12 months, even over a year? But if you're in that short-term buying mode, right now is the best time, because new construction is desperate. They're not getting the sales. Sales are, non-existent. The buyers aren't coming. So they're really, really desperate. And I'm talking to builders for, potential buyers right now, and they are really, really desperate. The interest rate dropping over 1%, and we see that that's the case when we analyze the 10-year. Now they're kind of feeling like, okay, hey, we survived the winter, we survived the holidays. The buyers are going to start coming out, and they are starting to kind of, say that and try to tell people like, oh, you got to buy. So they are trying to put the fear out there, but they're still willing to give the deals as well. So that's what we kind of have to analyze everything. Short-term wait, long-term wait. You have to first figure out, what do you want to do, right? Do you want to wait a year or longer, or do you want to kind of take advantage of what's going on right now? And we do see that nothing has stabilized, right? None of this inventory has yet started hitting the market. So you can't say that the housing market has stabilized, and we know that the economy hasn't stabilized fully either. So if you haven't yet, do me a favor, subscribe. It'll really help the YouTube channel. Smash that like button. That'll as well help me. Leave a comment what you think is going to happen. If you're in the short term, if you're in the long term, and what you're kind of looking for. What you're kind of looking for in the housing market here. And as always, thanks for watching. I'm going to keep sending these videos out here to YouTube so that way you're informed, that you can be the best informed, most informed buyer that you can possibly be, have that information for the short term, long term, and make a decision. Life doesn't give us, I keep saying that, doesn't give us what we want. It gives us options. I'm trying to give you the information so that you can make the decision, pick that option that you feel is the best for yourself and your family.